What's up, guys? Welcome to the Mississippi Real Estate Podcast, hosted by Ryan Watson.
And I'm Tripp Spruill, where it's all about real life, real talk, and real estate.
Join us as we dive into the stories, trends, and insider tips shaping the world of Mississippi real estate.
Whether you're buying, selling, investing, or you're just curious about the market, we've got all the insights you need to navigate with confidence. So if y'all are ready, let's get real.
All right, guys, welcome back. We are at episode 2, and we are going to talk about buyers today. And I think we're going to hit on a little bit of stuff on debt and a few things, and we'll let Tripp kind of take the charge on this one. And
yeah, this is some. I feel like this is
things that are dear to his heart.
Well, I think it's something that that we see on a daily basis. Buyers in today's market. What are their challenges? What do they not know that they think they know? Yeah. Things of that nature. Because, it's changed.
Yeah. We just want to help kind of educate our buyers in this podcast.
Yeah. We just want to get into a little bit of what it looks like for buyers in today's market, especially for first-time home buyers. But it's not just first-time home buyers either. I mean, it's people who have, who've already bought and sold a house before. Yeah. I think the current state of the financial world and the economic world has changed, and people just kind of seem to forget certain things or whatnot. But so anyway, I would ask. I'll ask you this: is there anything that you've seen so far with? You've had a few deals. Anything with buyers that has been a challenge or whatnot? Or
thankfully, with the deals that I have done, and like I said, I'm very new to this, so I'm gonna probably be learning a lot from you as we go through this. But with the buyers that I've had so far, thankfully, they've done this before, and so they were really easy to work with.
That's good for the first couple.
The bad things that kind of came to be in those situations, in those deals, were other
inspection reports, things like that.
Stuff like that.
So, I'll say from my experience and what I'm seeing is that.
So my experience has been pretty good, actually, with my buyers so far.
Yeah, that's good.
Shout out to my awesome buyers.
Yeah, there you go.
But not everybody knows what we're going to talk about today. Not everybody.
Well, I think people know. I think it's not talked about. I feel like, and look, I'm not trying to make this episode super judgy and make people feel bad about themselves. But I think things need to be re-exposed. Things like down payments and debt and things like that, because those are the first two things. Yeah. You really kind of need to have in order before you think about moving forward with a house. Because I'll tell you a good example why. When I say the current market has changed, I remember before the COVID pandemic, there was houses for sale up and down Old Fannin Road around the reservoir area, in particular neighborhoods, that were great starter homes. Mm-hmm. 2-bedroom, 2-bath house. I'll tell about. I'm not going to give an address away or anything, but there's one house that always sticks out to me very specifically. But it was a 2-bedroom, 2-bath house, and
this was a recent deal that you had.
It was recent. This is when I first noticed the change.
I got you.
From when we were in the market everybody was accustomed to, and then COVID hit and it got crazy. I'm talking about rapid fire deals, no appraisals, cash offers, outside money,
Going from that to where we are now, it's totally changed.
I mean, there was a lot that changed our markets, and not just locally, but nationally, right? Yeah. And so when that changed, I feel like perspectives on house buying maybe didn't change so much, and people were just kind of in a shock and awe of like, oh my gosh, how can I afford that? I mean, because I think they had to get almost into the deal to realize like, well, I might not be able to afford that. Yeah. And so the example I'm trying to give you is Barnett Bend 2. There was a really nice 2-bedroom, 2-bath home that was a great starter home or whatnot, and I remember when the world kind of caught on fire, that house was listed and sold within 24 hours at basically $180,000. And it wasn't even hardly 12. I mean, it didn't even scratch 1,200 square feet. This was an 1,100 square foot house. Nothing wrong with that. But this was what, before COVID, that house history was like, it was like $91,000 house. And so, you know what I'm saying? Like, that's a huge change, right?
Oh, absolutely.
So fast forward to today.
I hear a lot of agents saying today that 250 is the new 150 range of houses. And it has. I mean, it's changed that much.
It's been a significant change. So with that change comes other challenges, right? So what are the challenges for today's buyers? Well, the prices haven't gone down. The craziness of those deals and how quick they were going has slowed down.
They're not going to go down.
No, they're not. There's no crash. I don't think.
Sitting there.
In my opinion, there's no. You hear people saying, "Well, I'm waiting on crash. I'm waiting on a reset. I'm waiting on this." There's no crash. There's no 2008 crash coming. In my opinion. I know you hear about that stuff in other, like stock markets, this, that, and other, but the real estate market, I don't think is set up for that right now. We're going into 2025, and we still see that because inventory is low, housing prices are high.
They're
right?
still the same.
It's still a seller's market. It's better. There's some negotiations coming in. There's sellers' concessions, and they're coming off list price a little bit. But at the end of the day, it's almost like gas. Gas prices when I was growing up was 79 cents, 89 cents a gallon, and so we're never going back to that.
No, absolutely.
So those houses that were up and down certain streets and certain areas at certain price points, they're at a different price point now. So what are the challenges in today's market when we have the inflation we have the credit card debt that we have? So all the things that create this, and people want to get in a home, like they're tired of renting, they got married, they're starting family, whatever it may be.
I heard a statistic recently, don't quote me on this, but it was around like 75%, it was around 75 or 80% of Americans today have like over $30,000 in credit card debt.
Credit card debt.
75 to 80% is what I was hearing. That's insane.
That's scary.
I mean, and that
and
just
so again,
shows
this
you how
isn't
far in debt our country is. Not as a country, we're trillions of dollars in debt for sure. But as just generally American, we're in debt there as well.
So when people think
it hadn't been looking good. It's looking better now, but
well, we hope the outlook continues to look, starts to look better in the future. But when you go in to buy a home, because it is a huge financial step and undertaking, there's things that you need to have, ready to go. And I think some of this stuff has gotten, less thought about because what I'm seeing in the market is specifically on first-time homebuyers. But it's not just for first-time homebuyers. I've seen it in people who are selling their house and want to make the next step and say, well, I can't sell my house and even make a lateral move with interest rates and what I get off of this house and I get all that. But there are things you can do to make sure you can get into a home, maybe transition, go from the starter home to the next, bigger home. But I think, again, the meat and potatoes of it, and not to be judgy because, you got to do what you got to do, feed your family, and the economic and inflation, the inflation we're dealing with today is crazy. But one of the biggest things is debt. And so you talk about credit card debt. But if you ask people, hey, if a banker or lender is asking, hey, what do you have out there debt? I'm like, well, I got a credit card bill. I'm like, okay, so you got X on this. But well, is your car paid for? Like Sarah made a good point. Is your car paid for? No. Well, that's a liability. That's debt. You know what I mean? You got student loans still? Yeah. Well, that's a liability. That's debt.
Let me ask you this question, and you can kind of, let's pretend like I'm somebody who's never bought a house before. And I come to Tripp and I say, all right, I'm ready to buy a house. What do I need to do, Tripp? That's the house I want over there. What do I need to do?
So getting past all of the, hey, here's what we do contractually to get you set up with a realtor to be, to represent you and all that stuff. We're gonna, all the pre-approval stuff. We're gonna get into what's your price point.
Yeah.
What do you think your price point
kind of
is?
debt you got?
And
how much money?
well, there are a lot of people. A lot of people think that they're okay for a price point until they get in and talk to a lender and find out. And we can have a whole other segment with lenders or whatnot.
Absolutely. Yeah. But
the biggest thing that I like to know is after you've talked to your lender, like, what are you putting down? Yeah. Because a lot of people say, hey, I've had discussions with people not so, here recently, and they want to keep their payment in a certain monthly. Mm-hmm. And so maybe they're used to paying rent for $1,400 and they're like, hey, I can do that. What does that get me? Well, surprisingly, that $1,400 for a house may not get the 3-bedroom, 2-bath that they want and whatnot. So
it doesn't stretch as far as it used to during 2020.
Yeah, I mean, like I said, we're in a different time. Mm-hmm. So I have conversations with people, and sometimes I tell them, hey, maybe we need to take whatever the time may be to clean up some things. If you've got credit card payments, if you've got car payments, if you've got a laundry list of payments that are going out the door. Yeah. When you get paid and you have to knock off these things outside, food, utilities.
You better take all those things into account.
You got to take those things into account because, you're having to pay so many people that money. So it may be that you're not ready to buy a house just yet, and we got to clean up that debt portion of it.
And that's really, guys, that's something that we're trying to help people understand is that
you don't want a house to be a burden.
You can't just go buy a house, especially as a first-time home buyer. There's a few little things that we're trying to kind of help educate you guys on. If you are a first-time home buyer, on what you need to do, the steps you need to start making. Getting ready to buy a house.
That's right. And so the first step, in my opinion, would be to look at your debt. Yeah. Because the first thing a lender is going to do is they're going to look at your debt to income ratio. Right. That's how you get gauged. Yep. And so that ratio is important. So the more debt you got, and you're only bringing in X, you're going to have a smaller margin to play with, and that means you're not going to be, the lender's not going to feel comfortable lending a certain amount on whatever the house you think you're at. And I'll swing it on the other side too. Yeah. There's sellers selling houses that the prices are up there, and we go in these houses and they're they could be dated or whatnot, and you're like, man. You may not feel like that house is worth that price point because there's some updating needed in it, but at the end of the day, somebody's going to come along because the inventory's low, and they're going to pay the price for that house. And so there's the competition in certain price points are still really competitive. So I would say that debt is the absolute. First conversation. Well,
real conversation.
Yeah, real conversation needs to be debt.
I know you want to move. I know you're looking for a house.
But
let's figure out how to get
the less debt you got. I mean, it seems real. It's not real difficult. The less debt you got, the better off you're going to be able to pay for your mortgage or be able to save for your down payment.
Closer you're going to be to getting what you want.
Yeah, well, then save for your down payment or whatever else. And not to sound too much like Dave Rand, I am a fan of Uncle Dave.
I am too. I like him. He's a godly man, and
he is. And his principles are
good biblically.
He
sound
follows the scripture. His principles are biblical, and they're really just simple. Yep. So debt's number one, in my opinion. And a lot of people
put cash in there.
That's tough. Some people can
groceries.
Do that. Yeah.
That simple.
So I would say tackling debt is number one, and a lot of people. I get it. House buying, house looking, it's fun. Yeah. But you have to take care of that first before you really get your ball rolling. So if you've got a credit card, 2 credit cards, and a car payment, like you need to find a way to minimize those obligations because the next thing that you have to do is you have to look at a down payment. Yeah. And I think, in lenders...
car payment.
I mean, whatever you got to do. Yeah. Sit down with a financial advisor.
Put less money to groceries. Put more money in this envelope.
Yeah, or if you got to, read obviously you read the book. We could plug, give Dave a free book. There's material out there you can read about that. You could talk to friends that maybe people know people in their sphere and their inner circles, and some whether you want to admit it or not, you may know, Jane and John Doe over here, they don't have any debt. How'd they do it? Go talk to them about it. I guarantee you they'll give you pointers, or somebody will give you pointers. Come talk to us, a professional, or somebody, financial advisor. Yeah. But talk about debt. Get a hold on that, because the next step of getting in these houses is down payments. And this is where I feel like lenders have gotten really creative to find ways to get people in houses, but there's things that it's almost like people think it's unheard of to save 20% down for a house. It's not unheard of. It just may take longer.
Yeah.
And it may take more discipline. That's right. But in my opinion, if you can put down the 20%, it saves you. You've got a lot of equity. You've already got so much equity going into the house.
Right.
And then the lenders and the banks are going to treat you more favorable because you've got more skin in the game. Yeah. Then you don't have to pay PMI, private mortgage insurance, which is just a sunk cost really to the owner or the buyer of that property.
I don't want to make this about Ramsey, but I'll echo something that he talks about. There ain't no better bank account than your house.
That's right. I mean, it's a forced savings account. Is what he kind of talks about.
And you made me think about that when you were talking about saving up and putting 20% down. That 20% down, you're putting that into your house.
Oh yeah, out of the gate.
That's out of the gate right there. So you just saved 20 grand, and in 5 years, your 20 grand turned into a lot more.
Yeah, you're also saving on years of interest that if you put 10 or 3 down versus whatever.
Absolutely. Didn't mean to get a sidetrack there, but I was just
that's a great point.
Thinking about that.
And then also again, like private mortgage insurance, that's just the insurance company hedging their bet that they're going to be covered if you default, if you can't put that 20% down. And a lot of people and a lot of people say that's a lot of money, and it can be. It can be, and it may make you feel like you're sitting on the sidelines for a long time. I would encourage people to build up and put down as much as possible. I think even the last podcast I heard with Dave on the Ramsey show, I think they're like kind of promoting, and now don't quote me on this, and I'm not trying to get in trouble or anything, but I think they're even saying, at least try to get 10%.
Yeah.
They want they want you to have a best of a head start going in there, but you can't save 20, you can't save 10, you can't save 3 if you've got a mountain of debt. And it's real easy to go swipe a card and do all this stuff. And again, we're not trying to be judgy, but we're just trying to help people get in a home.
Oh yeah.
And a lot of I think people forget about those obligations in the excitement of going, I'm going to get my first house, because what bothers me as a real estate agent is when somebody comes to me excited about buying a house and I can't help them because I can't get the house they want because the payment.
It breaks your heart.
You can't. Or you show them like, well, hey, if this is what you can afford right now, then this is maybe what your house looks like. Right. And not that that's a bad house, but that's just not... the house. And I think everybody deserves that American dream. Everybody deserves...
Oh, absolutely. It's America. I mean...
Well, I think if you work hard, and I think most people do work hard, and they want to have the property that they desire and really want to build their life in and start out. I want them to have that accomplished. But, I've seen it coming out of COVID more times than not. Specifically the
post-pandemic.
when the world was on fire and buyers were buying up houses left and right, it was really knocking out our local market because we couldn't compete with all cash buyers and all that. And that's a whole nother deal.
I wasn't in real estate during that time, but I was a part of it as a seller.
Yeah.
During that time.
Y'all sold a house.
We sold our house, and I remember just plug this in here real quick. But I remember during those times, just if you remember those, this is from a seller standpoint.
Yeah.
I walked outside to my neighbor was doing something with a sign in his yard. I think there was another brokerage sign in the yard, and I just walked out there. I was like, "Hey man, what are you doing?" I was like, "Y'all moving?" He was like, "Yeah man, we're moving." I was like, "Well." I was like, they just put the sign in the yard. Y'all already sold it? And he's like, yeah, we just sold it. 24 hours. We had 25 offers. It was crazy. And I was like, well, if you don't mind me asking, what'd y'all sell it for? He told me the number. And I was like, I'm going.
We're selling ours.
Sarah, we're moving. We are moving.
We're getting out of here in 2 days.
Because immediately, I mean, there was so much equity that we didn't pay much for the house at the time when we bought it, but we had so much equity, and I was like, we're fixing to roll out of here.
Yeah.
My next conversation was to Sarah. I was like, we've gone. Then my next one after that was I called Mama and I was like, Grandma,
you may want to sell your house too.
No, it was. Can I bring 3 kids over there for just a couple of months till I find me a new house?
Yeah. Well, and then
that turned into 3 years, by the way. That was a whole another segment of our life.
Yeah.
We survived and we loved. I mean, it's just hard living with family.
Well, that was the double-edged sword of how quick things were moving. People would sell a house and they were getting all this great offers and all this equity, and then they're like, "But where do we go?" Yep. That was catching on. That like the selling was on fire, and then all of a sudden people were like, well, then you had people starting to say, "Well, I want to sell," but then it was the conversation, "Where do I go?" And we're like, well, I don't know. You better.
I don't know.
And then our conversation was,
you got a good
better have it figured out before we put the sign in your yard, because when we put the sign in your yard, it's gone. Yeah. It's gone. So anyway, that was a crazy.
But that was just from a seller standpoint during that time. I wasn't in real estate at that time.
Yeah, but congratulations, because y'all probably did make out really well.
We did. We bought some land out in Pisgah.
Yeah.
And I'll tell you, living in America, the hardest conversation, talking about bringing it back to that. The hardest conversation I think we had with anybody, because we live in America, and I felt like this is America, we can do what we want to do, and free speech and all the things, is we've got the county over here going, well, you can't do anything on your property unless we say so. And I'm like going, well, we'll see about that, because I live in America. And I bought this land, and it's mine.
Last time I saw the deed, it said Watson on it.
Right, but anyways, you jump through those hoops, and we did, and you start to realize that the county really is a lot more on your side than you think they are.
Yeah.
In many ways, they're not, but in many ways they are. You know, so. But it just doesn't look right sometimes.
Yeah, sure.
But anyway.
So. Buyers, take care of your debt. This is not meant, like I said, I don't want to get overly preachy. Yeah. But I have these conversations.
Look at your debt. Start talking to lenders.
I don't know. I can't speak for other realtors, but I think even if I come off harsh, or I'm not trying to be, like I said, I don't want to be preachy, but like it's a conversation that needs to be had.
Yeah.
If there's debt in the picture and you know about it, and these people are struggling to make ends meet, they're struggling to figure out how do I edge off a little bit of this deal so I can make this payment. It may just be they need to just pay off one more thing and save a little bit more money, because the debt rolls in. Because the next thing you're going to do is you got to get into a down payment.
Yep.
And there are loans where you can do 0 down and things like that, but
if you qualify,
the less you have in the game, the higher your note's going to be. So it offsets it if you're able to save. So that's another big one. Like be able to try to have something going into the deal. Yeah. I would love to start seeing people do 20% down again. I was fortunate enough with our first home, me and Tracy, we were able to do that. Yeah. We were able to do that on some of the rentals we bought. Heck yeah. And it just changes the game. Yeah. And some people say, well, we may have had X, Y. We didn't. Yeah. We just we saved. Yeah. And and I know it takes.
You gotta be disciplined, and you gotta put money back. Start a savings account. Put money in there. Eat sandwiches for a little while. Yeah. Sounds bad.
I mean,
but
eat
you a ham sandwich.
Have your friends over to your house and hang out instead of going out and or whatever. And you may have to take it. And I get it. Like everybody's got different situations. Older people may have kids and they're involved in school, so I get it. And so you just have to figure out, sit down, have the conversation with your spouse or if you're a single person with a financial advisor or somebody who is knowledgeable, and just figure out how you can kind of consolidate some debt and start saving money for a down payment.
And if you need any lender recommendations, you can always give us a shout. We can give you a few of them.
We can give you 3 to 5. You go shop any lender you want to.
Go talk to them, and some of them, the rates are going to be a little bit different with each one. So just kind of find out. Generally speaking, they'll be around the same. Yeah. but they may be a little bit different. You might be able to get.
And I don't, I don't ever say anything to any of my buyers about, well, I'm putting X down on this type of loan. That's where you're comfortable at. You're ready to make the move. That's fine. I'll help you in that, and I'll give opinions, and I'll guide the best I can. But for the sake of this episode, I will be more Dave-ish and say at least aim to go to that 10% if possible. 20% is your sweet spot. And it's 10% is good.
And what he does, it's just common sense. Just use a little common sense. Just be smart about what you do and just save money. It's easy. Just save money.
Yeah. Because I'll tell you another wrinkle that buyers are facing these days that we didn't have to a few years back. Insurance rates.
Oh, yeah. Insurance rates.
Everybody.
I know. I know nothing about insurance stuff. You have to elaborate more.
Well,
on that,
so obviously, since I'm a independent insurance agent too, this is something I do. You're friendly double agent. Thank you. Insurance rates is something that now, and I've had conversations with other real estate agents where they're coming to me and saying, "Hey, what are you seeing in the insurance market?" It's insurance rates are up in Mississippi. Insurance rates are up nationally, across the board. And it's gotten to be so that it is affecting real estate deals. And where it used to be just it was an afterthought. A lender would be like, hey, we got you at X, you're bringing X. Insurance is probably going to be this. And usually lenders were saying that yearly insurance on a, I don't know, a 3-bedroom, 2-bath house, we'll leave it at that, was about $1,200 to maybe $1,500 high on the high end a year. And that was about kind of a good benchmark. Man, those rates have changed. And I'm telling you, people go, okay, I got the down payment I'm comfortable with. I've got my lending set up. I got my interest where I'm at. And then all of a sudden the insurance quote comes in and blows the whole thing up.
You're like, oh,
so, people have to adjust for the increased cost of insurance rates.
We had a situation with one of my last deals that I did where we ran into a flood insurance situation, and it almost killed the deal.
Yeah.
Because we're understanding that flood insurance is not going to be, because of where it was in the floodplain, it wasn't going to be as much. But at the end of the day, it was. Yeah. We were like, oh no.
Yeah. Well, it's an extra cost you have to absorb.
Now it didn't. Eventually, we were able to make it all work, and the numbers still lined up like we needed them to, and we ended up closing on the deal. But I remember that being a hurdle.
Yeah.
And flood insurance, having to pay flood insurance is always going to be a hurdle in a sense.
And that's not in every deal,
I'm sure,
either. Though.
I'm not an insurance agent, but you deal with that kind of thing as a real estate agent. But it's definitely, I definitely remember it being like, one of those things, and we had a lot more conversations than what you typically would about insurance going into it, and what that's going to be. Versus what you were talking about, where
just
it used to
regular
be
dwelling insurance.
It wasn't as much. So
that's
something to consider and think about too.
Yeah, and look, all of this is a product of the same things of why the real estate market. It doesn't have so much to do with low inventory in real estate market, but the insurance increased cost is because of how much it is now for to rebuild a property or replace a roof. Like building material costs have gone up, and so
they're still up.
They still are up. And it used to it might cost I don't know, $300,000 to build a decent sized 3-bedroom, 2-bedroom home. Now it costs $600,000 almost. And that may be, those numbers aren't 100% accurate, but that's just what we're dealing with. At the end of the day, the point is building material, cost of things that go into a house to build or replace or fix have gone up.
Right.
Therefore, the replacement cost of insurance for that dwelling has to go up because insurance companies have to have enough reserves in the bank to cover claims, specifically if we have catastrophic claims. And outside of the economic issues, we've had a lot of natural type disaster with hailstorms, flooding,
floods,
and it's not just in Mississippi. People are like, well, we didn't have the fires in California, the flooding in the Northeast. That affects everybody. So again, buyers, what are the challenge to a buyer? Well, debt can be a challenge.
Yep.
Then down payment can be a challenge. Now insurance has become a challenge, right?
Yeah.
And then what's the other challenge that we see that's kind of the big four, in my opinion, is again low inventory.
Right.
So if you got somebody in the $250,000 range, that's in a lot of people's wheelhouse.
Yeah.
So you still got competition there.
Right. And I think there's not like so low of inventory that you just can't find anything. But the inventory is low, but the other problem is that prices, like we were talking about, are still high.
Yeah.
And so people are still trying to sell houses at, COVID prices.
Yeah.
I guess that's the best way to say that.
Yeah, but
so during post-pandemic stuff, people
Yeah.
are, they're asking prices for that. Now, I will say this: my last couple of deals that I've done, on one of them, I remember specifically, we were able to move the price a little bit. We came down a little bit.
Yeah, it's
to
happening.
meet our buyer.
Yeah.
So we're definitely not in the pandemic pricing.
No, it's not as crazy. It's calmed
not
down.
as yeah.
It's calmed down, and I will say this too. Like,
I don't know if I explained that well or not, but
my last few deals, I've got one that's about to go under contract today, and it's we came in under.
Congrats.
Thanks, man. Appreciate it. A little selfish plug in that, but no, but we came in under, a little bit. So we are seeing the good news is, and I think the further we get away from the pandemic, I think cost and things will eventually settle out. But will they go back to what they were pre-pandemic? No. I think that's why I just want buyers to be better prepared.
Right.
And I feel like
that's our ultimate goal with this.
I feel like it's human, but we're in a natural,
episode.
We're in a natural state now where we're, consumption minded. So our first thing is like, I want a house, I'm going to go get a house. And then all this
credit card.
That's right. And all this other stuff is an afterthought. Like, go get the thing, figure out the other things.
Right.
We need to start figuring out the debt, the down payment, just being a little bit more geared toward the responsibilities of getting into that home. Because what happens is, if you don't take care, what can happen, if you don't take care of those things, then you can get in trouble once you get into a home. And the last thing we want to do if we sell somebody a house is see them have to, sell it or foreclose. And or that house is I want a house to be a blessing, not a burden.
That's right.
And things are going to happen with a home. So so let's say, okay, we got debt out of the way, we got a down payment. Well, to close a house, a buyer still may have to pay some closing costs. Mm-hmm. So some people say, "Oh, I put X down on a home, but now you're saying I have to bring this to the closing." I'm like, there's still fees and whatnot that have to be satisfied. Now, again, these are all starting to be talked about in the negotiations, but I feel like there's just been here lately, the challenge for buyers it's been real easy for sellers lately. Yeah. And that's to say people aren't buying, because they certainly are.
Absolutely.
But I feel like specifically for the first time home buyers, it's a big shock coming into the home market. Yeah. There's also there's some people that own homes that say, "Hey, I'm going to sell my home at X." Yeah. And I'm going to be able to put this much down, but they forgot maybe. So, because what we saw a lot of is, I can't sell my home during the pandemic, but a lot of people started renovating homes. Yep. And how'd they do that? Well, they took out home equity lines of credit.
Second mortgages.
Yep. And those might not be paid back yet.
Yep.
So if you sell your home, you might have the higher price point because of where your house sits, and the location is great, and the appreciation is awesome, and the prices are, because inventory in the seller's market. But not only are we having to pay back what's left of the first mortgage, but now we got to clear the mortgages. You got to clear first and second, and so then your net looks different. Yeah. And people go, "Oh, I'm not taking that much," and so again, that goes back to the debt thing. But
you're gonna have to pay closing costs. That's definitely. I mean, in Mississippi, $68 ain't a lot of money for termite stuff, but that stuff you gotta take into account.
Yeah, sellers, there's things that we can Again, the good news is I think further away we get from pandemic, we're starting to see some cooling down. It's still a seller's market, and it's still low inventory, so therefore keeping the prices kind of steady. But the good news is the negotiations are starting to come back. I would love to reach out to folks that tune into this and just know that you can save.
Termite would be on the seller side.
Yeah, the seller side is termite.
Most of the time. I'm sitting here thinking I'm talking about termites.
But for buyers, I want them to know that you can make a difference in your debt if you have it out there. You focus on the one thing, and if you got another thing out there, then after you get the one done, focus on the second. But focus on your debt. Then try to focus on saving money, and it'll serve you better getting into the housing market. But again, I don't want to be Debbie Downer, because you can certainly buy a house, but I want people to be better prepared and understand what they have to go into, because I think people go, house, get it, and they forget to have conversations about. Anyway, I've said a lot.
That's going to make our conversations with our buyers a lot smoother too.
Yeah.
Because
you want to come at you when I have these conversations with my buyers, I'm really coming. I'm trying to come at them with this conversation on it. I get it. It's an empathy level. I'm trying to help guide you. I'm not trying to punish anybody.
Yeah.
But you have to have the conversation at some point. If you don't do it early, you're going to end up having it after you show a house or two, and you're like, hey, maybe this isn't a house that you can afford, or you have to have that conversation. Maybe you got to clean something up or whatever. It's just better to let buyers know what they're getting into. And I just think because of past recent experience and some of these challenges, I just wanted to hit on this topic.
Yeah,
because I feel like it's important.
I'll say a little bit too. I'll say this. It just from an educational standpoint, if you are wanting to buy a house, your first phone call should be either to your real estate agent, and that can be me or Tripp. Whoever your favorite real estate agent is, whoever's the best.
Oh boy.
Just kidding. Or your friendly double agent. But make that phone call and say, hey, look, I'm really thinking about buying a house. What do I need to do? And what we're probably going to do, and any good agent out there, real estate agent, is going to say, you need to talk to a lender. And then you call your lender and you say, what do I need to do? And then they're going to give you some advice, and they're going to tell you what we've been talking about. And we're not bankers.
No.
We're not lenders.
No, I'm not trying to get in the lender world.
We're not,
on this.
but we know that these things, as professionals in this field,
because they're going to talk about they'll get into the debt part.
They will. They'll get into it a lot more depth.
Depth. Yeah, you can't say that.
Depth. Yeah. Anyways, but that's something that you need to talk about with your lender. And then you can figure out, all right, I need to start saving if you need to save. Or you may have 20% down sitting in a little nest egg somewhere.
Yeah, if you do.
And you can move forward. That's great.
And if you don't worry about it.
You call your agent back and say, hey, we're ready to roll.
We're ready to rock and roll this deal. And if you don't have 20%.
I got a pre-approval letter. Let's roll.
Yeah, but it's not to freak out if you don't have the 20%.
Right. Yeah, no
you
freaking
can
out.
still move forward.
That's right.
As long as you're comfortable with your, like I said, if your financial house is in order enough and you want to look, I've got people that bought houses that have the 20%, but like, hey, I just want to do this.
Yeah.
I don't want to eat up. Okay, that's your prerogative. Let's move forward.
That's right. And that's conversations that you have whenever you
because we want you guys to be able to buy houses.
That's right. That's right.
You know what I mean?
Yeah.
And that's the whole message of this. We want you to buy a house, and we want to help you get in that house. But we also want to understand some of the hurdles we got to get past as consumers and
that's right.
home buyers.
Yeah. But I think you pretty much.
I don't know, man.
You pretty much covered it on the buyer stuff.
We may have to address some more in depth, or if somebody leaves a comment, we can always circle back to it. But
absolutely. If y'all have any questions about anything or the topics that we talk about in our podcast, you guys please feel free. Like I said, the good, the bad, and the ugly. We take all criticism, it doesn't hurt our feelings if it's bad criticism.
No, and again, it's
just going to help us grow and be
right.
better agents and be able to better serve our community and serve you guys. And but yeah.
Yep. Well, we just want you to be in a better position. Again, this was not meant to be preachy or judgy.
Absolutely not.
I want buyers to be in a better position, and I want them to, maybe start thinking about things that sometimes this stuff has gotten taboo to talk about.
Yep.
And I just, if I can help before we get to that process, then that's what I want it to be.
And that's what we're going to do. We're going to talk about real life stuff.
Yeah.
It's real talk.
Real talk, real estate.
And real estate.
Yeah, absolutely. Well, look, we hope y'all got some of value out of this episode. Leave a comment if you got any questions, something you want us to talk about, or just something you want to know more about in the comment section. Don't forget to like and subscribe.
Yeah.
To whatever we're going to call this.
All the things. Follow, like, subscribe,
right.
comment. Let us know your thoughts.
Yep.
Thank you guys so much.
Y'all have a blessed day.